share. So yeah, this is a second iteration. One good thing is like during the talk in the last previous week with a couple of funds, when I mentioned that like we from time to time do these things and we are still not structured, but like hopefully in the future we'll have some structure there. And if they would like to join these things, they were quite interested. So maybe that can be like fun in the future, like sentiment community talks or whatever. But yeah, like this time, let's try to be more structured. And I think that there are a couple of people that prepared something. So I guess that we can, as always, start with Dino, and then we can go over one by one.
Okay. I'm sure my screen. Okay, I haven't found too many interesting things in our charts, but there are some of the things that I wanted to show you guys anyway, from both Grafana and other publications and things that they've been talking about recently. So this came up, and it's they're kind of using the same methodology that we used, I would say, about 4 months ago. Basically, Longcash is saying that the altcoins with the best ROI are the ones that are the most centralized. So you guys may or may not remember this article that we wrote back in April, which is basically based upon the same kind of methodology, except it kind of returned exactly the opposite results. So what Jan did is he used our top holder distribution charts in order to make a ratio of how distributed or concentrated all ERC20 coins in our database were. And then based on that data, we then plotted the top 50 ERC20 coins by those that are the most distributed and the most concentrated. And by far, the distributed coins outperformed. So I asked Jan just, I think, about a month ago to make me a follow-up on this article to kind of show, because we have an email list. Every month we send people on that email list the top 10 most distributed and most concentrated coins. So I was like, can you calculate how good of a strategy it would have been if you invested in the top 10 most distributed coins since the article was published until whatever that day was, and it wasn't actually that good. So this was what he plotted. So back in August. So distributed coins, the top 10 distributed coins are in black, and they actually performed worst. Whereas concentrated coins and Ethereum were kind of neck and neck at the cutoff line. So it seems like something has been changing, and this article seems to support that theory as well. So what the article basically does, and I'll share it with you guys here if you want to read it afterwards, is uh, it basically looks at the very low cap coins. And that's where they found the most correlation. So this is the chart that you want to be looking at. So when it comes to the correlation of the tokens with a market value of less than 10 million, there seems to be high correlation between the most concentrated coins, or the coins that have the most of their total circulating supply concentrated in the top 100 biggest whales, and their price action. And the theory or the hypothesis that they're presenting here is that it might be the fact that it's easier to manipulate with this coin, which is probably the case. But so this is, it's something that we've already kind of done in the past, but seems like we need to go back and try and update the analysis, because the things seem to be changing. It used to be that the distributed coins performed better, but it seems like maybe it's because of the shifting conditions in the market. It seems like the concentrated coins are now maybe even a better ROI.
If I may jump in, like
Yeah.
maybe like philosophical looking is like it's a really long time that the market, it's bear market, or like the market is not amazing for trading or whatsoever. So people got anxious or people got irritated by that. I'm talking about the more centralized coins, and like as you say, like potentially a couple of people having much more power over the network than the others. So philosophically now, like I'm like literally making the assumptions, but potentially I don't know, like because like there was a pressure from their investors or whatever to make some more money, like they were trying to look over the opportunities to do that. And yeah, that's the only thing that I would say that would be theory. This kind of like a theory that they were collaborating or doing something shady on the side.
Yeah, it could be. I mean, keep in mind that the market cap is below 10 million. So these are just shit coins, right? So it does make sense, number one, that they would be more centralized. Like, I don't really know of many coins below that sort of low cap coins that don't have a high centralization ratio. So Jan's actually been working on dashboards that will kind of calculate these, and we'll probably put them on graphs.sentiment.net at some point. They're not on staging yet, so I can't show it to you. I can show you some screenshots later.
And
But yeah, most of this will actually be able, like, we will have dynamic charts and dynamic data for this in the near future.
And also the good question is like the volume for trading of those coins, right? Like, so that if you're talking about the profit and taking the profit, you would need to have like the opportunity on some of the exchanges to actually make the profit. So yeah, I don't know, like I'm not sure that this chart is showing that, but like just
It shows the transaction volume is not super correlated, but yeah, I don't know.
so yeah, like well, as you know, like if you want to make a profit, you need to sell that to someone. So yeah, I'm not sure. Okay.
Yeah. So that's point number one. Point number two is this tweet from Elias, which it kind of touches on what I was talking about last week with the USDT tether, ERC20 tether, and how kind of it correlates with the price of Bitcoin over time. So what he's done on this chart is he is showing that the total net exchange flows of, well, he says total stable coins. I'm not sure, he doesn't explain what he means, but let's assume that he means Tether and maybe USDC. Maybe DAI, I don't know. But let's say it might be just Tether, all like versions of Tether. So what he's saying is that during the first quarter of 2019, the exchange flows were kind of balanced, and so the price remained pretty much the same. And then as the inflows kind of started to dominate, so did the price of Bitcoin, and then vice versa during the tops when the exchange outflows of stable coins began dominating the market, which is something I showed in the recent Bitcoin crash report we did. A lot of withdrawals of Tether from pretty much all big exchanges, and over the last month it was, the outflows by far dominated the inflows. So did the price start to trend downwards as well. So actually, it makes sense from the perspective of stable coins and USD Tether in particular. ERC20 Tether in particular, having more and more influence. As Omni gets burned and ERC20 becomes the standard on most of the exchanges. I think it would be really interesting to make some sort of a chart that does this or shows this in particular. So maybe we can combine the exchange flows of a few big stable coins or just Tether, and plot it over the price of Bitcoin, have it as a dynamic chart or something like that. I think it might actually be quite interesting. Yeah, he doesn't mention what it is, which stable coins he was looking at. But one of the stable coins that I was looking at is USDC. So obviously not the stable coin that most people kind of associate with the big price action, with having a big impact on the price action. But I was looking at its maximal mean age, and it seems like we could have used this as a potential leading indicator for Bitcoin. Now, obviously, once again, I can't show I can't plot the price of Bitcoin here, but what I can do for you is I can show you what the dates here are. So this is the maximal mean age on July 8th, and then it dips horrendously on July 9th. So let's go to the Bitcoin chart and show you what was going on at that point in time with the price of Bitcoin. It's kind of amazing. So July 8th and 9th, right? So this is where there was a dip in maximal mean age. And also, this is where there was a spike in percentage of active coins over the last 90 days. So from 71% to almost 79% on July 9th. So this is right as, sorry, this was the top. This was right as we were reaching the top for Bitcoin, that the USDC started kind of increasing in activity, and then boom, the rest is history. So there's definitely, a lot of things that I would like to do in terms of And I'll talk to Jan about it when he comes back, in terms of like trying to analyze the correlation between different stable coins and the price of Bitcoin and Ethereum in particular, especially ERC20 Tether, because that's the data that we have, and maybe USDC. But I thought it was interesting to see how the activity of stable coins seems to correlate with the price of Bitcoin over time. I don't know. Any comments on this? Seems kind of crazy, just how accurate it was.
Can USDC, or I'm sorry, can Tether, the Omni historic background, be merged with ERC20 to get a better macro view?
I mean, I think so. So the problem, and I don't know if this is weird. We don't have exchange data for Tether when I look at it here. So let me show you. I don't know what the reason is. Okay, come on. We have Tether exchange data when you go to exchange-specific analytics, but when you try to look for it here, it just returns no data. So here. So there's no data points for Tether in like our basic metrics. But then when I go to exchange-specific analytics, I can just look at everything USDT related. Yeah, so I think presupposing that suggestion, we need to fix our exchange flow data for Tether and just combine it across all exchanges, because here it's possible if you want to go granular, but you can't look at it like in a macro scale, on a macro scale. But as you can see, this is what I was talking about, the amount of withdrawals of Tether over time on bigger exchanges has kind of dominated and dwarfed the inflows since the biggest.
But that's ERC20, correct?
Yes, that's only ERC20.
So,
but as I mentioned,
mean,
yeah, go ahead.
Looking at it as a window as a whole, we can only see it from the ERC20 launch, so it's not really telling us a whole lot.
This is, yeah, so I think, yeah, I mean, you're right. This is when Binance has said we're not taking Omni anymore, and everything needs to be ERC20. But still, like, even though you can see from that point kind of what the trends are, I do definitely agree that it lacks a lot of context if we don't, stitch on the Omni data as well. But I don't think we have that, and I don't know if we are even planning on adding that at any point, at least for now. You can see it in other exchanges as well. So BitConnects. One sec. Yeah, so same thing here, right? Exchange volumes, outgoing, incoming. You can see the differences. So yeah, that's another thing that I kind of wanted to show. The USDC data seemed pretty interesting. And then I had a few like things that I don't really know what to make of, but they seem interesting. So there's been a huge spike in daily active deposits in DAI recently. I don't know if anybody has any idea what this is about. Is this a bug in our system, or is this actually, was there some news related about DAI? Because it's not like when you, okay, let me show you. When you look at the
deposit, can you tell me the dates? I can maybe tell you, like, if it's last 2-3 days, like there were,
yeah,
I don't know what is the number of people that
it was Wednesday.
So basically, like, it was the day, if you remember, when I was bugging you to fix my grammar for the tweet storm about grants. So
you think that's the reason?
Well, it is potentially the reason. Like, you can check on Gitcoin how many people gave the grants, but like just me did 40.
Oh no, but this is deposits, Joe. So this is only stuff that's going to exchanges.
Interesting. Well, maybe people were swapping. Like, that's also the possibility. Like, I was doing a swap. Like, I bought like 30 or 40 DAIs on a Kyber swap, for example. But like, I don't know if that's the.
I don't know. I don't know why you would.
No, this is not deposit. It would be the outflow, but like
Yeah, exactly. It would be the withdrawals, which are.
I am not like as I said to you, like the only thing that I know was connected with that is that like first 3 days of last week of this week was a lot of people were talking and a lot of people were like giving grants. But yeah, maybe that's related with God knows what, I don't know. But yeah.
Yeah, I don't know, but it seems like so stark. All of a sudden, you have 2,000 deposits, but then when you go to the deposit volume, it really isn't even a blip on a radar. So it seems to be retail investors, but I haven't seen any news that would have made
Would be,
this.
I think that this would be good for you to kind of like pinpoint and share with developers just to check if it was a glitch or not.
Mm-hmm. Yeah, I can do that.
Is there also a big spike in regular daily active addresses?
Let me show you. Not really, like
No,
a small
actually.
one, but it doesn't necessarily have to be, right? Because it's still 4.6K daily active addresses.
Well, I don't know, like if people were depositing to how the MetaMask is like. I don't know, like as I said, like maybe it's a glitch. Maybe we are tracking something as an exchange that is not exchange. I don't know, but I think that we are like we just add something as an exchange address only if you're 100% sure that it's exchange wallet. Okay, can you please pinpoint this and share with developers? That's cool to kind of like investigate a bit more.
Sure. Yeah.
They also released a new platform, right? This new Oasis version. Maybe that has something to do with it. I have no idea
Maybe.
how, but I think that has been in the last couple of days.
I don't know why you would send your DAI to exchanges because of it, though. You know, like something's been. I don't know. We'll have to investigate a bit more. I was also looking at Link and saw some interesting, well, sort of interesting developments just recently. So as I mentioned, like none of these are fully still like completing in my mind what they might mean, but I thought it was interesting to show you if we get. Okay. Yeah, so there's also a huge influx of, and Kelvin might like this. There's a huge influx of a link to exchanges just recently. Like, what is it, 3.79 million in balance, and the token supply has been rising. And if you look at it seems kind of small, but if you look at the historical trends for how Link's amount of supply on exchanges has impacted the price, you see that when it was, before it was actually dropping, that was when the price was really able to, reach new highs. So it rising again might not bode well for Link going forward. So let's try and zoom in so I can show you. And again, a huge spike in daily active deposits here. Okay, maybe zoom out a bit. But this one's at least correlated in terms of the volume of coins. Okay. Yeah, so the biggest spike this year in terms of daily deposits of Link. So something for some reason, people are sending a lot of Link to exchanges recently. And then, yeah, deposit volume, again, there's a spike not as big as the one which kind of put a last nail in the coffin for the rally. Huge number of transactions as well, and nothing in terms of withdrawals. So I don't know, Kelvin, you're the Link expert here. Anything here that you might know about, or how do you explain the spikes?
Sorry. Link is having a very good rally in terms of you cannot look at it in USD price. If you look at it as a Bitcoin ratio, it's looking very good. It's almost hitting 2x from the recent bottom. So I'm not surprised if people are looking to sell or at least like exit if they don't believe in Link anymore.
Yeah. So yeah, that doesn't. Yeah. If you look at just the regular charts, it doesn't really look anything very interesting. You need to really go down to exchange metrics. But yeah, those are a few things that I kind of found looking at the charts just recently. Yep. Let me stop sharing my screen. And
thanks, Dino. Anybody else?
Yeah, I'm happy to go over NVT a bit, as I promised last week, if people are interested in that. Let me share my screen here for just a moment. Let me know if people can see this.
yep.
Excellent. So I considered sharing just a screen of the one we have on our sand graphs, but I'm working on this with Neil right now. We were going to actually get it integrated onto sand sheets this week. He came down with a bit of an illness, so that's delayed, but I have it on my Excel database here. And I want to give you guys a brief overview of sort of how it works, why I rely on it so much, and why I believe it's a great metric for us to kind of start sharing and pushing out publicly, because people are really going to find it interesting with just how much correlation there is with Bitcoin's price and Ethereum and some others. I've got this is what we're looking at now is a zoomed out monthly view of the all-time history since Coin Metrics began providing data for both the market cap and the transaction volume in USD. NVT is very simple. You simply take the market cap divided by the US transaction transfer value in USD, and you get a number. Now, these numbers by themselves don't matter, but the numbers compared to one another over a period of time gives a pretty good indication of whether something is high or low, no matter what token it is you're looking at. What I did was I took the all-time average of the NVT in transaction volume, not to be mistaken with the token circulation form that we currently have up on Sandgraphs. This one I believe is a little more reliable, so this is the one I went with. So I took the all-time average. As we can see here on the chart, it's the yellow line, and it's currently at 18.2 historically, right? So looking at some of the recent ones, before I go to the daily view, I'll just show you the small numbers here that I calculate and I pull every couple days. We haven't seen a number below 18 in months. In fact, the last one was in July, and July was the last month that we really had a surge in price here. So these blue sort of translucent bars are Bitcoin's price. The area chart here is NVT. You should immediately notice there's a bit of an inversion between the two. You'll also notice this orange line, which is a 12-month average, and it's very important as it's basically a trend line for this yellow line. And combined, what I look for is this area chart to dip below either the orange line or both the orange and yellow line. When it does that, you'll notice over history, anytime NVT has gone below both the orange and yellow, the price has increased. Obviously, you can't see this very well because I'm not using a logarithmic chart right now, but these are actually pretty significant percent increases that sort of started here, got a little stagnant, and then shot up as NVT was well below the yellow line. I did notice that it is more important for NVT to sit below yellow. Orange is more of just a kind of an even bar that you would look at for whether Bitcoin is going to stay flat or possibly move up. So as we can see, when it moved up here recently, over the early part of 2019, it began moving up in price despite it not being below yellow. And this is when I started really using that 12-month trend line and realizing it doesn't need to always be below yellow in order to surge. It simply needs to be below that 12-month line to have a chance of moving up. If it's below yellow, it is almost guaranteed to move up. And from what I've seen, this is one of, if not the most reliable indicator to predict future price, assuming the trend doesn't, obviously start reversing as soon as you start to make some assumptions about where NVT is looking. It tends to be pretty consistent over time, and I'll show you here the daily view. So as you can see, I once again have a yellow line, and then the orange line here is just flat because it's taking the most recent point of that 12-month average and using that as a basis for whether NVT should be above or below that. What we can see here, we have the white line in this case as Bitcoin's price. We have this blue line as a 7-day trend, which, as you can see, has a very predictable inverse correlation with Bitcoin's price. So I use that to sort of justify what NVT is doing over a week span here and how Bitcoin tends to react to it. Red bars here mean that there is a bearish day. It goes all the way from orange, yellow, greenish yellow to green. Greens are very, very good days, and they tend to correlate with future price movements upward. So you can see very clearly here, when it started to surge in mid-June and really take off, we saw almost all bars well below the orange line and plenty well below the yellow line as well. When it started to finally fade and the momentum started to run out, when it hit, I think, what is it? It looks like it was just a little over 12K. That's when the red bars started to show up, and transaction volume was not keeping up with the market cap in USD. Since mid to late July, we've had almost all red bars. And right here, this was kind of a false bullish trap that I saw as a trap because of the fact that there were so many red bars here. And basically what I want to do is convert this to Sand Sheets, get it all automated. We can connect it to several different tokens. I also have it here for Ethereum, if you guys want to check that out. It works pretty similarly to Bitcoin. It has its own average. In this case, it's at 39.2, which isn't really significant compared to the 18 that Bitcoin was at. All that matters is what each day is doing compared to each other / month. And then we can really see what happens when the area chart was well below. As you guys knew, Ethereum 2017 was pretty much Ethereum's year. It dropped, I believe, just a little below 10 here, and the price just started to soar like crazy, all the way to, I believe their top average month, it got to about 1086, if I saw that little pop-up come up correctly. And as soon as it peaked, you could see NVT went above the orange trend line, and we immediately had a losing month. And then when it went above the yellow line as well, it really started to drop off. It hovered a bit around here, and then as soon as it basically continued declining all the way until December of 2018, when it finally dropped below the yellow line. And what do you know? There goes Ethereum's price going up once again for the first time. And then it finally went back down as soon as it went above the orange line here. So I think this is an extremely important correlation, and something that I want to get onto Sand Sheets, do some articles for it, also create a few more videos like I did with the instructionals for Sandbase, and get it out to the world and see what they have to say about it. So if you guys have any questions, I'd love to answer the best I can.
Yep. Thanks, Brian. So the first thing that I would say is that we definitely need to do some backtests on this with Jan. Just so we can see what a strategy including NVT, how it would have performed compared to the benchmark before we can, just so we can kind of determine how effective it would have been over different time frames. I like NVT as a metric, and it does make sense. I think it actually, to me at least, makes more sense for Ethereum than for Bitcoin, just because of the nature and the philosophy, I guess, of Bitcoin. Like, so basically, a high NVT will just mean that the network valuation is higher compared to the value that is currently transmitted on the network. But if you're looking at Bitcoin as an SOV or a store of value, that doesn't necessarily need to be a bad thing for the network. Whereas if that's happening in case of Ethereum, that's probably a bad sign.
Right.
Yeah, I don't know, like definitely an interesting indicator. It would be great to see, like, in terms of actual data points, how well it would have performed as a strategy, like year to date, and then dating back to 2017 or something.
Yeah, absolutely. I even went a little more in depth and started to look at how it performed on different days of the week, how it performed during certain months over time, part of the month, etc. And then I actually was able to see, like, I believe weekdays tend to have better performing NVTs, whereas weekends there tends to be a little less overall transaction value. So the NVT shoots up a little bit. So if you adjust for that, you can actually make some interesting calculations that way. There's really a lot to unravel, but yeah, I mean, to me, the proof is kind of in the pudding. And if you really look at each individual month and how it performed based on what the NVT of any particular month was, it's got something like a 90 to 95% correlation in what the direction of the price did. So it's something that I definitely want to, do some studies with and do some back testing with you at some point, and we can see what we find.
Cool. Yeah. Agreed. Let's. Next step will just be to talk to Jan and have a few. I think it will be easy for him. I think most of the stuff is on SamPy, so it wouldn't take long to calculate the, back test a few time ranges. So, cool. Yeah.
Awesome.
Brian, I'm curious. You're right now you're applying it as an indicator, and you mentioned not having a log chart on. How does it appear when you look at it on a log chart? And it's kind of like a twofold question. Would you think it would be better as an oscillator to look at underneath price action?
Yeah, I think we could present it as both a log chart and as a flat chart. Under the log chart, the percentage gains and losses are pretty equivalent to what we're seeing now. Whether Bitcoin was going from 100 to 150 4 or 5 years ago, or from 12,000 to 14,000 back in 2017, the gains and losses are pretty much within range. Whether if NVT was showing bullish signals and was under the average threshold, it wouldn't only go up 10% now, where it went up 70% in 1 month back then. It is pretty equivalent based on just how bullish or just how bearish the NVT signal is showing. So I think there's a case to use both, but I think that a flat chart would probably be more preferable, because the log chart might end up giving some misleading, confusing ideas, because the percent gains and losses have stayed pretty stable over the years.
Okay, yeah, that makes sense. I mean, that's kind of why I was thinking it might be nice to see it as an oscillator, so you could look at it with a log chart without it being exaggerated.
Yeah, absolutely. We could definitely try that. I've never really seen it as an oscillator, but I think in theory what you're saying would work.
And Brian, if I'm not mistaken, you've tried it with daily circulation and it didn't work as well, right?
Yes, yeah, I failed to mention that, but I tried it with daily circulation as well. There isn't as much of a correlation. In fact, it's almost meaningless. There might be some purpose for it down the road, but at least right now there isn't really that inverse correlation even more than half the time. And you guys can always check it on sand charts. If you look at it, we have both a circulation indicator as well as a transaction volume indicator, and the transaction volume and the price tend to move opposite almost all the time, whereas the circulation one is a little more random. So between the two, it's kind of a no-brainer right now that we'd want to go with transaction volume to really tell a story. So I would go with that for the short term. I also tried both Coinmetrics and CoinMarketCap. I know that we pull our data from CoinMarketCap. We had a slightly better performance using Coinmetrics. That being said, it's still significant enough on CoinMarketCap where we could easily just use our own data and it wouldn't make too much of a difference.
Okay.
Thank you. Thanks, man.
Thanks, Brian.
Okay, so who is up next? Anybody else want to share something?
I know Dan has something to share.
Yeah, I see that he's shy.
It's like when you're sitting in class and someone volunteers you for stuff.
Teacher, Dan has something to share.
Yeah, I mean, I can quickly go over the insight that I wrote, since I know, including myself and Dino, at least maybe one other person read it.
I think you're being too generous, but okay.
Yeah, I know. You definitely didn't read it. Give me 1 second. Let me present. All right. I do have one question though too. Is there any way to pull data from Coinbase API? Because this I pulled up here. I found pretty curious that they're giving up a little bit of information about their top holder activity, and I noticed that today just poking around.
Yeah, they introduced that a few months ago. I don't know, maybe. I don't think we have anything to do with Coinbase.
And actually, I think that there was a question around this, Dino, a couple of days ago from one of the funds.
Yeah, not this specifically, but they were also interested in Coinbase addresses and how the Bitcoin exchange, I guess, flows.
Yeah. Okay. Never mind. Like, continue, Daniel.
I mean, it'd certainly be interesting to get more Coinbase information, whatever can be pulled out of API or that they're offering, considering they're giving up some tapes here, and also having increased the fees. I think I got the email yesterday and saw a bunch of. It seems like to me they're just trying to stop people from making them the Binance on ramp for fiat.
Yeah.
But
it's like 0.5% now, I think, or something.
Yeah, for people who are really not trading on their exchange, which makes sense. So like, hey, if you're just moving money over to Binance, we're not going to be the gateway for you. They could just make the exchange better, and then maybe people would use their shit exchange, but who knows. But anyways, so I had wrote up an insight earlier this week going over percent of active coins with Ethereum specifically, because I've been pulling over the coin activity on Bitcoin and Ethereum a lot lately, and kind of like I had alluded to in the insight, talking about the possibility that it could be a representation of supply and demand. And here I have the 3-year active coin pulled up, which I actually didn't include in the insight, which was more like an oversight, but nonetheless, I did add it to the tweet storm that I published about it, to give a bit of a view that as the activity falls, I mean, we can surmise that it comes up with a few different scenarios. More people are holding, more people are locking it, some coins lost, who knows, so on and so forth. Either way, is it resulting or participating in price appreciation? And this is, like I said, the 3-year chart here. Anything prior would show 100%. So I just selected it from 3 years post ICO up until today. And the percentages on the 3-year chart seem somewhat insignificant, but they certainly aren't when you start taking into account the total supply. And offhand, I don't remember what I had calculated on the insight, but it's like right now, 0.5% inactive or active is over 500,000 Ethereum when you calculate it against the total supply. So it's actually a decent amount. As you can see, though, as the supply is more active, we do see price falling, and as the supply becomes less active, there is price appreciation. I wanted to go a little closer. I think that's why I also left out the 3-year chart and went to the yearly active coins and the 90-day active coins, which does bring me to a point. It would be really nice to see like 18-month, 6 months, and 2-year just to start seeing if there's any variance between those, because these windows are nice, but there should certainly be, like, even 30-day might show a decent amount of what the intraday traders are doing and what's happening with swing traders. But we can see that the supply plummets as the price is appreciating. Again, I'm not going to go all out there and say this is like cause and effect. It's just correlation, and not necessarily saying it's bad or not. It seems as though it has some sort of relationship to pay attention to, in my opinion. But right now we're at the lowest it's been, I think, in terms of 90-day. Yeah, 90-day active coins, that literally an all-time low since Ethereum's inception, which I do find rather interesting. And there is a number of things going on with Ethereum on other metrics that make me pay attention to this. And I did point that out too in the insight here, where this outlier, if you look at it on a number of metrics, on age token consumed, transaction volume, believe network growth, withdrawal, or deposit volume too, this outlier shows quite clearly, and it was large enough to impact 90-day active tokens quite considerably, and then nothing happened with it. So whatever this movement was sat for 90 days and then aged out of this dashboard, and the price just continued to rise there, as we know. So again, nonetheless, it's not a whole lot to say, just kind of pointing to the data and looking at ways that it can be interpreted in different structures. I did want to bring this up though, because I thought there might be some interesting thoughts, and I'd be curious to know if anybody had any ideas on it too. These are like this is what I call like the mega whales. These 5 addresses, I think, right now that hold this much Ethereum, but I didn't include it in the insight in the manner in which I'm looking at it. It just seems oddly comparable, almost leading in ways. And then I look at it in other ways and it looks like it lags, but I just thought it was an interesting visual nonetheless, to see how these massive token holdings then being dropped down, and some of them are actually grouping down into lower brackets, but they're seeing movement in those lower brackets as well. But the spikes are ahead of time. So that's pretty much all I have to offer on that.
Are these, I don't know if we have that data, but they're probably exchanges. I think you mentioned that in the insight as well. I mean, I don't know. If there's only 5 of them, I would assume it's like Binance and a few other addresses.
Yeah, it was 9 right here. And then as the price went up, it dropped 6, 7, 5, and it has remained 5 from pretty much June onward. So it stands to reason that it's exchanges. I would be hard pressed to think that it's anyone else, unless Vitalik is sitting there having fun with the market.
Yeah. Okay, so if it was exchanges, would you read into it differently, or how would you read into it? Assuming that all of these wallets are just exchange, like big exchange wallets.
I'm indifferent to who or what it may be, because at the end of the day, the token movement is a token movement. So if it is exchanges and the tokens are being called upon for activity or inactivity at this point being pulled into cold storage, but it's still representing activity in the market, whether it's positive or negative.
Right. Yeah, interesting stuff. No, I don't know. Not much to add. I think the 90-day active coin chart looks fairly convincing, but I guess we'll see what it does, because according to your hypothesis, we should have a bull market coming up.
Yeah, and I'm inclined to say, like, for other reasons, not just that, I'm still leaning towards that.
Yeah,
I mean,
you are pretty bullish on Ethereum.
Yeah, I mean, from a technical perspective, I'm holding my count. Though some might disagree with it. I didn't see the top of my one horrifically violated here. So this larger degree first. I know there's a lot of lines there. Pretty much not cleaned up to be presented at all, but nonetheless, like, this being my larger degree first, didn't get violated, and I would have kind of expected it to have some sort of, altar boy violation if it had really been the end of 5, and it bounced pretty much right there. And then there's a decent amount of other stuff that seems to support my ideas that we should be seeing some rapid price expansion within the near future. I wish, I know Jan isn't here. Within the next couple of weeks, I would greatly like to, if Dino, if you, myself, and Jan could go over what we were talking about earlier with daily active addresses. Those divergences and the strength of daily active addresses seem to be one of the more, I would say, potent metrics at the moment. Every metric has its own weight, but I'll just show the screenshot for now as a teaser. This
yeah, so this is as some of you, I think Max will know what this is if he read that. So let me share that again. I have it here. This is the report that we got from one of the guys that is currently using our metrics on a discounted rate for the sake of writing these sorts of reports. So one of the things that he did in this analysis was he brought up this divergence in the amount of daily active addresses and the price action. He did it for Bitcoin initially, but yeah, we talked to Jan about kind of creating a model for this for all of the coins, and these are the preliminary results. These aren't like set parameters, but I think then you like made them yourself, right?
Yeah, so pretty much Jan created the model and fed me the model, and I've been playing with the window and the threshold. The threshold for this, we're looking at Ethereum as it is. So I changed it from Bitcoin and looked at Ethereum and set the threshold at above 6.18. So it will fire a signal if the disparity between price and daily active addresses is above 61%. And then I did the look back window of 34 days and threw it on the last few years. And the results were rather interesting because these were the only signals fired, but these signals fired at really nice times.
Yeah.
So there's some promise here, and again, like I said, when Jan is back from vacation, it would certainly be worth getting into this a little further, because I found equally interesting results when playing around with Bitcoin as well. Except, I mean, with Bitcoin, I can produce a lot more signals.
Yeah.
I mean, and that's just due to the sheer amount of activity going on the network, I would imagine. And also, I don't know if anybody, I imagine a lot of people are like myself, and I never use the same address when sending transactions. So I always regenerate new addresses on my wallets. So I'm sure that comes into play. Either way, it is really encouraging, and I think there's a lot to look into here. Jan and I,
yeah,
go ahead.
Sorry, go ahead.
Well, I was just going to say that we had been discussing a lot in the past, looking at divergences altogether, and hadn't settled on daily active addresses. So Dino, with your foresight, it was a good idea. I'll give you credit there.
Of course, because it is my. I should be given credit. No, but the good thing about this, other than the fact that, well, let's start just with the fact that this is a bottom indicator, and we're kind of lacking that in our toolbox at the moment. So really looking forward to seeing this being, applied on a few different coins at a few different parameters and seeing how it performs. That would be nice. And then another thing that we need to talk to Jan about is that in his analysis, which I just linked in this post, the guy also mentions a convergence in the AAN price as a sell signal as well. So both the divergence and convergences for him can mean a specific thing. It also depends on the time frame that you're looking at and how long it holds for, the convergence. But that's also something nice to be looking into. Like just in general, that's another top indicator. I think we have quite a bit of them, but it can be just another nice one to support and cement the theory and what you're looking at on the charts. But this one in particular, is something I think that we're missing at the moment. So really hoping that it pans out.
Yeah, and I mean, some of the stuff that Jan and I have discussed in order to tweak this will be color coding the signals. So, daily active addresses up, price down goes green, daily active addresses, the opposite price, and just so we can see which direction it's heading in and to see if there is exit entry strategies to be heard from that. The convergence is a smart one to look at as well. All in all, there's a lot to be said. Where is that? With the convergences and divergences. For instance, this was one of the other things that Jan and I had talked about in relation to that, was kind of taking a look at where different indicators lag, especially the period-based ones, that you can kind of look at what the market is doing from a larger perspective, whether it's the intraday guys or more of the investors or the basement dweller shitcoin lovers, whatever they might be. But you can see that these outliers, especially like right now with Ethereum, all of a sudden the last day and a half, we've had a large increase for the MVRV for 1 day and 7 day.
Yeah, keep that. I'm not sure if that's correct, because I was looking at the same thing for a few different coins, and it's spiked up for I was looking at the same thing on Chainlink, on Engine, a few coins. They all have this huge spike in the MVRV for the last day, and it doesn't make any sense.
Right, that's what I was trying to figure out earlier too. Well, that's good to know. You keep me posted on that. Still, nonetheless, the idea of 30-day and 180-day being different, and one having a higher high while the other has a lower high, does seem to be invocative of price action. So
yeah, I mean, that's the theory behind the long-short difference as well, right? So it makes sense.
Right, and I remember you asked me, what was it, a couple of weeks ago, why I was looking at it rather than just the ratio, and it is specifically to see those divergences, which have been telling. So at the moment, that's all that I got.
Okay. Thanks, Dan.
Is there anybody else that want to share something? Okay. Good, because we are at roughly 1 hour of the call, so that's kind of a perfect match. Okay, once again, thanks everyone. If you're okay with that, just to ask, especially two of you guys that share this, if you're okay, one of my ideas was just to kind of map out who was talking in which minute when the talk started, and what's kind of overview of what was explained there. And my idea was just to share that with the community on Discord and get some anonymous feedback from people. So share that with some just Google form where anybody can just give the feedback openly, and see where it goes, because I would like to shape a couple more things. Is that okay? Especially first of all with you, Daniel. That's the first question. Since you're like community member, not officially like some employee.
Yeah, no, that's no problem at all.
Okay, cool. Because the idea is like as soon as possible to kind of like open up to the at least like Santiment family on the Discord, and like maybe have a couple more people to become engaged in these calls. Okay. Anyway, we will think about the call next week, especially because there will be a lot of people in the DevCon, and a lot of people will be in Japan, so it will be like hectic. But yeah, thanks everyone once again, and yeah, let's sync during the next couple of days.
Thanks, guys. See some of you at DevCon.
Thanks, everyone.